Welcome to the Asset Channel, News Behind the News. Today we have Bayani Cruz, Executive Editor of the Asset, who just hosted a roundtable called Enhancing Portfolio Performance Through Smart Beta. That was a very interesting conversation.
Yeah, it was very interesting. We had a lot of figures back and forth on smart beta, factors, what constitutes smart beta, and how it's being used by...
Now, you started with definition. You asked everyone, what's the definition, right? What do you mean?
Well, apparently, the definition comes from smart beta is something that, well, first it's a hybrid between active investment and passive investment.
Yes,
so it's somewhere in between. And what makes it different from traditional investment strategies is that it doesn't follow a benchmark, or they try to steer away from the benchmark.
What I picked up by is that it's rules-based and non-market cap weighted, right?
Exactly.
So that's what defines smart beta, right?
Yes, and they use some what they call factors, which are basically most common ones would be value, low volatility, and momentum, etc. These are the most common factors which they use.
They use for the construction of the factors.
Construction of the portfolio.
There was an interesting point that was raised in the sense that because of the need to get a global consistency, that Asia, the uniqueness of Asia or the peculiarities of Asia are not being reflected in the smart beta, the factors that have been developed.
Exactly.
What do you think of that point?
Well, that's something that needs to be addressed in the long term. The reason why that is because right now most of the research and methodology and experience has been used for broadening, well, for a global holistic perspective, right? Asia is more unique, so...
And most of them are coming from the developed markets.
Exactly, so that's why we need a more Asia-centric set of values, I guess. The other thing is that not all values work, or not all factors work the same over a given period of time. So some values, some factors may work now, then it may not work a few months later. So it has to be reevaluated. I mean, the factors that you used, if you are a smart beta investor, you have to reevaluate it from time to time to make it consistent with the objectives that you want to achieve. Yeah.
Smart beta, of course, is the new development that we're seeing in the ETF market, a market that has grown tremendously. Today, it's about over $4 trillion from where it was just a few years ago, and Asia is, of course, riding the same wave. One thing that I picked up is that factors are a means to an end, and I feel like people should not over-concentrate too much on the other aspect, but really defining what their investment objectives are.
Exactly.
And the other point that I thought would be interesting to share is that factor investing, this was a comment by one of the panelists, is for some like harvesting wheat in Kansas, but that is not the case.
Yes, well, according to them, it's more like changing seasons. You have to adapt with the changing seasons, right? So like what they said, you have to reevaluate your strategy, your smart beta strategy, and how you use the factors from time to time so that it remains consistent with the objectives that you want to achieve. Yeah.
But yeah, thank you very much for hosting this. It's been an interesting day here at the Asset Channel, News Behind the News. We will, of course, be publishing the roundtable in the next issue of the Asset. So look out for it. If you're interested to subscribe to this channel, the Asset Channel, please click here.